I'm Jessica Minton for IB Times TV, and I'm here on the floor of the New York Stock Exchange where stocks were up after a series of data was released today. Jonathan Corpina from Meridian Equity Partners will be speaking with us about housing data, manufacturing, and retail sales and its effect on the global markets. The Philadelphia Federal Reserve Bank said its Business Activity Index, which measures activity at factories in the Mid-Atlantic region, was at -7.1 in August, its fourth straight month of contraction and shy of economists' expectations. The report offers an early sign of the health of U.S. manufacturing. A separate report from the New York Federal Reserve on Wednesday showed factory activity in New York State contracted in August for the first time since October 2011. The Philadelphia Fed's manufacturing index showed a fourth straight negative reading, and yesterday the New York Fed showed a similar decline. Do you think that other indicators such as overseas economic conditions and the uncertainty of a 2013 tax plan are affecting these surveys?
I do. I think our markets and our economy continues to be in a very fragile state. And looking at the economic data that we get here domestically and the international data clearly is reflecting growth, but not at a fast enough pace that everyone wants to see and would be comfortable with. And in some areas, there's decline that's there. So whenever these factors, these indicators come out, I think it gives investors a reason to really pull away from the market and have some sort of fear that still this market, yet it has been moving in the right direction, there could be a factor that's out there that's going to move the market into negative territory at some point.
Data showed the number of Americans filing new claims for jobless benefits edged higher last week, although a longer trend fell close to a four-year low, indicating a slowly healing jobs market. Growth and hiring were disappointing in the spring, and expectations that the Federal Reserve could unleash more economic stimulus have grown, but the likelihood of action at its next meeting may be dimming. Will a pickup in hiring in July, as well as gains in retail sales and manufacturing output, reduce the likelihood that the Federal Reserve will announce another round of quantitative easing?
I think you take that data there and then you couple it with we're getting closer to an election, and I think every day that we get closer to an election, any QE3 talk is going to come off the table. Why are they going to use their bullets now? Why are they going to make a significant move like that now, especially in an election year? There's a lot riding on what's going to happen in November. Yes, you can take a step back and say, listen, we've got this national problem here, and let's not focus so much on the election, let's focus on fixing the problem. But at the end of the day, I think when you have two parties who are vying for position and power, making a significant move like QE3 would not be in anyone's best interest right now at this point. The data has been showing some progress, some stability, and as long as these numbers come out and they're not terrible, I think the Washington is going to use that as an excuse not to use those bullets just yet. They're reserving that for when they think they might really need it. But right now, it just doesn't seem like it would be the right time.
Other data on Thursday gave mixed signals about the strength of an emerging housing recovery, with groundbreaking on new homes falling slightly in July, even as building permits rose. Housing starts unexpectedly dropped 1.1% last month, as the industry continues to have trouble finding its footing. Data showed that building permits were up in July, but housing starts were down. What do you think is more important to look at, that the permits were up or that starts were down?
I don't think either is the more important factor to look at. I think what's important to look at is that it's conflicting data. And the longer that we get conflicting data, investors are going to take a step back and say, you know what, I'm not going to do anything. And it's not just in that area, the housing area, that we get conflicting data. We get it in the job market, initial claims, continuing claims. We get it in retail versus GDP and PPI. All across the board. Take this week, for example, large slate of economic data so far. We're pretty much through Thursday at this point, and the data so far has been some good, some bad, and it all depends on how you view these numbers that are there. So until we get some sort of direction, and one-way direction, where everyone feels that, yes, this market is moving one way or the other, whichever way it might be, the conflicting data, I think, gives the investors the reason to say, I'm just going to sit and watch this thing. But as you've been sitting and watching this thing, the market has continued to move higher and trade higher, and we're getting to lofty levels of waiting to see, well, what's going to be the next move. Light volume, a lot of volatility at this point right now. So at some point after the summer, I think we're going to start seeing some significant directions in our market.
Upcoming data set for Friday includes consumer sentiment, which is expected to be little changed from the end of July's reading. I'm Jessica Minton for IB Times TV, reporting from the New York Stock Exchange.